For many, the first foray into the market feels like walking onto a casino floor. It's a rush of hot tips, flashing tickers, and the hope of a massive payout from a single lucky strike. At 24, I was making 14,000 rupees a month at my first job. I spent that time throwing money at microcap companies I had never heard of, purely because a contact whispered that the stock was about to spike. When these bets actually pay off, they create a dangerous sense of confidence. It becomes easy to mistake a lucky streak for a repeatable strategy, turning the market into a highly addictive table. Then life happens. You gain a family and a set of real-world responsibilities. Suddenly, the money you're playing with isn't just a scoreboard. It's the foundation for people who depend on you. The market, symbolized by the sheer scale of these towers, is massive and entirely indifferent to your personal bills or family needs.
A portfolio built on tips and guesses provides no protection if the primary earner is suddenly unable to provide for those responsibilities. Managing wealth for the long term requires moving away from the slot machine and building a financial fortress designed to survive both market volatility and personal tragedy. This fortress begins with a non-negotiable base. Before you purchase a single share of stock, you must lock in the first block, absolute security. The primary tool here is a high-premium, pure protection term life insurance policy. This must be kept separate from your investments. I skip all money-back or hybrid schemes, treating insurance purely as a tool for risk management rather than a vehicle for growth. The goal is a payout large enough to erase every family debt and cover all future living expenses indefinitely. This high premium is a deliberate trade. It creates a financial floor that activates the moment your personal income stops, ensuring your family's lifestyle continues without a single day of monetary doubt. Once the base is secure, we move to the first 40% of the active investment portfolio. This is the patient core. Here, we focus on value investing in large-cap, dominant companies that operate within industries essential to modern life. Look at the scale of modern information technology. This sector is responsible for the digital infrastructure that will expand globally for decades. We also look toward heavy industry and petrochemicals. These massive operations provide the fundamental fuel and materials required for all modern infrastructure. Finally, we anchor to the constant demand of retail and telecommunications. This warehouse checkout line represents the persistent consumer spending driving these foundational sectors. Success in this tier requires total emotional detachment. You buy the market leaders, log out of your brokerage accounts, and leave the portfolio untouched for 10 to 20 years. By refusing to react to daily market noise, you tie your wealth to the long-term, inevitable growth of human civilization. The final segment of the pyramid is dedicated to high-risk momentum plays and smaller caps. This is the catalyst. A momentum strategy involves buying stocks as they trend upward and selling them before the trend breaks. This requires a level of constant data monitoring that is nearly impossible for a casual investor to sustain. Many turn to mutual funds for this, but that often results in a loss of visibility. You are effectively handing your capital to an anonymous manager without knowing exactly what is happening inside the fund. A more transparent alternative is expert delegation through platforms like Smallcase. These allow you to follow the specific strategies of professionals who study the tape 24 hours a day. In this setup, the experts do the heavy lifting of market timing and stock selection. They send the signals, but you retain the keys to your account. You are the one who chooses to execute each trade. High-risk investing becomes manageable when you stop trying to outsmart the daily market and instead leverage professional expertise while maintaining final control over your assets. This approach marks the shift from a reactive gambler chasing rumors to a systematic wealth architect. It's why advice from amateur friends or well-meaning relatives is often counterproductive. They generally lack the professional data and emotional discipline required to build this kind of structure. Success depends on dividing your focus. You fiercely own your baseline insurance and your emotional reactions, while you delegate technical momentum trading to those with the time to master it. This strict hierarchy helps eliminate the constant urge to check tickers. It converts the energy spent on market anxiety into time you can spend on your life and your family. This hierarchy results in a financial machine that corrects for human error and market swings. It ensures your family's future is anchored to a system of diversified assets that grows steadily, even when you aren't watching.